Okay, we'll now look at exercise 1017 on page 569. It's a variation of the previous exercise. It says assume the same facts as in exercise 1016, except that the fair value of the old equipment is $170,000 rather than $200,000. Prepare the journal entry to record the exchange. Okay, we still want to put the new equipment, and I'll call it equipment new again, which is not ideal, but it makes the point in this situation. We want to put it on the books for the fair value of what Cedric Company gave up. Well, they're saying now assume the fair value of the old equipment is $170, and they gave up $60,000 in cash. So we'll put this on the books at equals $170 plus the $60,000. $230,000. Again, we want to take the accumulated depreciation off the books. It had a balance of $220,000. We're going to credit the old equipment for its cost. Which was $400,000. We're going to credit cash, asset that decreased as well, for the amount paid out, $60,000. Now let's see where we are. We're $460,000 on the credit side, $450,000 on the debit side. We need more debit to balance the entry this time. Now you don't want to just add it in here. We want all our debits together, so I'm going to move this down. Okay, that didn't work exactly like I wanted it to. Let's try this. Copy. And let's just paste our formats in. Now it looks okay. Alright, so we need more debit to balance the entry, so this time we have a loss, you guys. Remember, losses increase on the debit side, just like expenses. Gains increase on the credit side, just like revenues. Here our loss is $10,000. We've got, let's make sure though, equals 400 plus 60,000 minus the 230 minus the 220. Yes, $10,000. Gains are very similar to revenues. Revenues are what the business earns in the normal course of operations, as I mentioned in the earlier video. So let's say this Cedric Company, they have a computer is all we know about them. So let's say that's a landscape business, and this is a computer they're using there. Their normal course of business would be earning revenues from doing landscape work. So selling a computer that they use in the business would not be something earned in the normal course of operations. Right? So to be a gain or a loss, it has to be either unusual or occur infrequently. And we're going to say that this company selling a computer is an infrequent occurrence. Wouldn't be that way if it were Dell computers, of course. I hope you see the difference. You guys, that wraps up the videos for the semester. Thanks a lot for your patience. It hasn't gone as smoothly as I would like as far as the spacing of everything throughout the semester. I apologize for that, but I appreciate your patience, and I've enjoyed it overall, and I hope you've definitely gotten something out of it. and happy holidays. Have a great evening. Thanks. Or morning or whatever time it is when you're watching this.